Hey everybody, how you doing? This is Road Quant 1 coming at you straight from Southern California, out near the beach somewhere in our offices. Hopefully everyone is safe out there. Today we want to talk about something that happens a lot in the market. It's called gaps. Stocks or ETFs gap up, they gap down. Especially stocks gapping up and gapping down is a common occurrence during earnings. So a buddy of mine had asked me, hey, how do I actually place an order for, an option, this and that? He is anyway, hey Sean, how you doing? This one's for you. So this week we noticed on Monday that gold had re-entered the gap. So it was trading up at 190. The ETF GLD was trading up at 195 or something. It came down to 190, and then I believe it gapped down to like 183 or 185. So if you look at this chart, you can see here's where it gapped down. And so we waited until Monday. It actually started entering the gap again, and we saw there was the offers and the bids and the asks were basically rising on Monday morning. So we finished trading Monday morning, and we basically just left one call out there. We were long one call, which we bought for $10 or about $1,000.30, 1030. And then the next morning, I saw the gap had closed. So it almost touched 190. I think it was trading at 189. So I quickly adjusted I thought it was going to take a little longer than that. But Tuesday morning, we adjusted our limit position to sell at limit 1325, making almost $300 on $1,000 investment roughly. So it's just more than 28%. If you take your proceeds, back out your profit, and divide that by your initial investment, you get your ROI, return on investment. And here, if we pull up the Spider Gold Shares, which is GLD, it's the ETF that tracks gold essentially, you can see we're almost around the same price, not 183, but 182. This is as of 4 p.m. Eastern Time, August 21st, 2020. And you can see there's a lot of activity in the options market, but notice the implied volatility is about 22.8%. That's on the puts, it's on the calls, and this is the September 18th contract that we were looking at. We actually traded the 177 call. We were long the call, and we took it from $10 to $13. Now notice, as we're closer to options expiration, 28 days, those are now trading at $7. So that's why we take the profits quickly. But if you look all through here, the implied volatility is pretty consistent. It goes up a little bit, but you can see even here, the September 30th, they're 22 something percent. So if you take that 177 strike and you take 22.88% implied volatility, and if you basically, let's see, calculator, if you take 22.88% and you divide that by 15.87, you can use 16. This is a magic number. It's the square root of 252, which is the number of trading days per year. But you just got to remember, divide that thing by roughly 16. I like to be exact, so 22.88% divided by 15.87. This gives you 1.44% move. So basically what that is telling you that all this 22.8 roughly, look, it's very, very close throughout the strikes. It's just basically saying that, hey, gold, if it's at 183, it's going to move approximately 0.0144% times 183 equals, about $2.60 per day move. So it can go from 180 to 182.60 to 185, etc. And that's how we determine what the market is telling us that the implied volatility is going to move, so that per day. So if you divide these numbers, either side, you see implied volatility over here. But if you divide those numbers, any of those numbers by 15.87, that'll tell you what they think that the underlying is going to move for that. But in this particular case with GLD, which we almost never trade, that's why we did this as an example. Our total risk was $1,030 plus commissions on one contract, and the next morning was up to $1,300 and something. So almost up $300 on $1,000 investment overnight. Those are the types of trades we like to see, almost 30%. We never go wild with, if we're not gold traders, so we don't really know that market, but it's okay to take one contract And watch out for Apple. That thing is gonna crush 500. They're saying it's going to 600.